Wall Street insiders are currently stacking up on these 4 stocks that I'm about to show you today. Of course, these aren't just any companies. These are companies that are showing great revenue, and some of them are great for short-term plays, some are great for long-term plays. And since I value your time, let us get into them. The first of them all is our big ol' Nvidia. Nvidia looks like the base it is creating is slowly finishing, right? And the reason why this base I think is completing is because we can see a contraction pattern. So basically the stock is contracting over time. So the first time it went down 30%, then it contracted, went down 18%. Then the third time it's contracting and went down only above 6%. Whenever you see stocks contracting like this, they're about to jump out. That's why I drew this line of least resistance. And as soon as Nvidia jumped out over here, I'm saying that the stock is about to explode and go up. It's something called stage analysis. This is something called a late base. Nvidia has run up a lot, and currently these very late stage bases are very prone to failure. So that means that this is something which is more of a swing trade rather than something you want to hold on for a very long time. Of course, Nvidia is a great company because from the fundamental point of view, we can see that the earnings per share growth is amazing. The year-over-year revenue growth is amazing. We want something which is averaging about 15% for the last 4 quarters in revenue growth. Nvidia has hundreds of percentages. Earnings per share, we want something which is averaging about 25 to 30% in the last 4 quarters. Nvidia is doing hundreds of percentages. If we look at the return on equity, it's 91%. And for a great company to invest in, you only need 17%. So now on the technical side of things, Nvidia actually is at its all-time highs. Whenever a stock is at all-time highs, there are no angry sellers waiting to dump the stock on you. That's why you want to get into such stocks. And of course, the profit projection here is for a swing trade like this, we get 1.5, the average trend in the last 14 days. We can see the value here, 7.75, which is also down here. Also 6.2%, so we just put that in. At the first, let's say 6.4%. The first goal is 3 hours. Of course, that's where Nvidia is expected to go first. On a 20% move, then if it does that in less than 2 weeks, we can go to look at a 30% move. So the next goal is normally 5 hour, and we don't know what happens from there. We just wait and see. We cannot predict everything. Now that is the first stock. The second stock is a FinTech disruptor that's flying under the eyes of most investors because they're focusing on these big companies. And this company is called Dave Inc. Now, this company, of course, we can see the relative strength of this company is very strong. Relative strength means its strength relative to other stocks in the stock market. The stock has run up very highly, as we can see, and then it is just sitting here and it has been contracting like this. So you can see it has a big contraction, then as this big contraction comes, contracts a little bit, and then contracts here a little bit. Now, such moves are normally a recipe for a stock to break out. So this is the daily chart. If we look at the weekly chart, we can see something very similar, right? We can see the stock has run up and it is just sitting here waiting to break out again. So of course, this one has a return of equity that is negative. That means the company is not that profitable. But the earnings per share growth is amazing. It's what we want to see. And also the revenue growth is amazing and is something that we want to see. It has an average of above 15%. Earnings per share, it has above 30% over the last 4 quarters on average. And the return on equity, we can see it's lacking. We want to see something like 17. So this one is a little bit more of a speculative play. But just because the stock is speculative and is not making money does not mean that its price cannot go up. So we've seen this so many times in the stock market before. So just like the other ones, when I show you how to play let's see how we can play this. So we see our contraction pattern. It's right there. So we get our risk to reward ratio. We put it in here and then we can see. So we want to put a stop right below these 2 days here. So a good time to get in was actually here around $41.6, but we're not too late. So what you can do is you can still buy this on market open. Stop will be around 3.9. You want a stop that's not farther than 3.56 or 1.5, the average true range, because normally once it's past this, the stop is just too wide. So we want to make sure it doesn't go below those 2 candles here. So that can be our stop. And of course, our goal is normally 3 times this. So we get 3.56, which this is close to that. And then we can see the first goal is 3. So this is our first target here. And the reason why I like this target is that this stock it's not close to its all-time highs. So there are a lot of angry sellers that could be waiting to dump the stock on us. That's one thing. Another thing is that there is a resistance here. So you see this place where the stock stopped and had a great reversal candle. Normally the stock could fail there and come back and try to form a little bit of a handle. That's why this is the first target. So swing traders can get out there. And if it just blows past this, of course, then we can look to hold it to 5 hour. And then there you can look to hold it for a longer term. So that's how you can play this particular stock. But even if you're to stop here, you can get 3 times your risk back, which I think is very good for such a safe play. And another thing is that if you have to look very closely on these days, when it's correcting here, the volume is lower, but in this breakout day, it's a little bit higher than normal. So that is something that we like to see. Next stock is a household name that everybody knows. Everybody is using this particular company. And of course, you know what this is. It is Uber. Now, this is not only a swing trade, but it is more of a long-term play. So it's a stock that you can hold for about 3 to 5 months. So here we can see, if I take away my drawings, we can see that Uber is at its all-time highs. So that's the first good thing. You want stocks at their all-time highs. The fundamentals are looking fantastic. Revenue is growing at least 15% over the last 4 quarters. Earnings per share is averaging 30% over the last 4 quarters. Return on equity is above 17. So this is an investment grade stock. So this is something you can hold over several months because the company is actually a good business and it is making money. So those are the 2 ways that you can trade this stock. You can see it has come down here. It has consolidated. The black line is a 50-day moving average. The blue line is a 20-day moving average. So whenever you're trading, you don't want your stop to be above the 20-day moving average. You normally want it to be below because when it's above, you're most likely extended as in the previous stock. Doesn't mean that it won't go up, but you're likely extended. And we can see we have a strong resistance over here. So this is our first swing trade that will return. That is about 3 hours. All right. So if I put $3 as my risk, so I calculate 3 hours. But of course, this looks too wide. We know that this is the target because normally it will move 3 hours in our favor. If 1 hour is 1.5 average 2 ranges, that is something I researched and found out that's an average that the stocks will move. So what we can do is that we can tighten up our stop. So as soon as it moves above this candle, our stop can be around here. It can be around 3%. If you want it really tight, I feel like you can even do 2% on this, but I would do more like 3%. I think 3% is safe for such a stock. So when you get in with 3%, you can make 12%. So you'll make 3.84 risks back, right? But that is for people that want to swing trade this thing. Uber is not just a swing trading opportunity right now, like the other stocks I showed you before. It's also a long-term play. So what it's doing is something which it did at this consolidation here. So if you're trying to play this for the long term, this is something you can do. You can hold it. Once it breaks out here and it gets out of this resistance, that's a good time to buy. Or you can start accumulating your shares around here. And then after it breaks out very clearly, what then you'll do is wait for it to correct to the 50-day. So we can use this as an example, this past trade, but this is something you can do to see how you can hold this stock. So here we can see it gapped up on earnings, it broke up and went above this base. So this is what an investor could have done here. So we see the stock has broken out. So you buy your first lot here. Maybe you've put in 10% of your account. You wait for it to correct to the 50-day moving average or the 20-day moving average. So basically you want to see it form another short base, which is what it did here. You always want to have your weekly chart and your daily chart right next to each other. After it comes back here and then it corrects and then it moves up another 20 to 25% from there, then you can sell. So once it comes, you wait for it to come back here, then you can add more shares. So let's say you put in 10% of your account, then you can increase it to 20% or you can increase it to 15% of your account. And then from there, since now your leverage, you can just look for just a 20% move in your favor. So here we can see it did about 34%. But even if you sold at 20%, that was still a very good sell. You're still going to be profitable. You could have sold here at 25%. So that's a way you can hold this stock for a big ride. And that's how the really big money is made, by pyramiding into a stock like that. Get in from a very big base like this. This is a very big base that normally leads to big moves. This is what we saw in Nvidia and SMCI earlier this year, you can see SMCI did the same thing. It had this very huge base, and this is something that Uber is having right now. And then we can see what happened to SMCI. It went up about 100 or 300%. So I'm not saying Uber is going to go up 300%, but such big bases have the recipe for such a very huge move. And of course, our last stock is CLBT. Now, this is something which is more of a swing trade. And the reason I'm telling you it's a swing trade is that we can see that it has already gone through its large base one. So whenever you see a stock going through its large base, this is the first time you can buy, and then you can pyramid on base 2, and then you can add to the stock. But if you catch the stock on a base 2, base 3, what you're trying to do is just swing trade it at that point, because after base 2, the stocks will normally falter and fail. Or if it just comes from base 1 and has a very long run, like what we saw in SMCI, you can see, from base 1, it just had a very long run, and then there it just collapsed, because this move is something which is normally done in about 3 bases, but it did it in just one particular move. So our CLBT, it has finished that really long base, so we could have gotten in here with 10% of our account. So we wait for it here. This is for longer term players, people who like to hold things for 5 months, not just 6 months. So you get in here around $12, that's what they could have done. Maybe their stop was about 6%, and now they're in a profit of about 37%. And since it is now forming a base here, now you want to see a base that's at least 4 weeks. So we can see this base is at least 4 weeks. It has spent at least 4 weeks ever since it started consolidating, because the first time it came is 27th August, and now it's getting out again. So what we can do is we can estimate it to be 3R, and each R is 1.5 average true ranges of the last 14 days. So we have the value here, 0.86. I've already put for you the first target. It's about 15% move. So that's where you can get. So you risk about 5%, you get about 15%. If it does that in less than 12 bars, or in 3 weeks or less, or 2 weeks or less, what you can do is now aim to sell it here at about 25%, which is 5R. And then after that, the stocks will normally start faltering, and we can just see it here. A good bounce was here. So this is a good entry from here. Average true range there was about, we can read it up here, was 0.775. So you put 0.75. So normally the first goal is 3R, as you can see. And if it does that in less than 12 bars, then you can go, the next goal is 5R. So you can see that it actually stopped around 5R. I don't know why, but I realized most stocks will move 3 to 5R. But if it does 3R very short, it will then move to 5R. Of course, there are many stocks which go past that, but this is an average that I saw happens a lot. And those are our technology stocks that we can profit from this week. If you're finding value in this video, please subscribe to the channel for more videos like this, and also like the video so that the algorithm can send it out to other investors. Thank you.